From the hills of West Virginia to the high rises of Chicago. For over 30 years, Dan Frio has mastered the real estate market as one of the country's premier mortgage advisors. Dan is now sharing his experience and knowledge with the AM 560 audience. So sit back and learn how Dan has helped his clients manage the ups and downs of the real estate market across the country. Now, here's the host of the Mortgage Update, Dan Frio.
Good morning. Welcome to the Mortgage Update with Dan Frio. Today's show is action-packed, and we're going to talk about a whole bunch of topics, and we're going to have a special guest, Shalom Klein. You can also hear him on AM 560. Get down to business Sundays at 6 p.m. He's going to join the show in the third segment. What I want to talk about in the first two segments of the show is basically this. You know, all that you hear on the news is coronavirus, COVID-19, the CARE Act. A piece of that puzzle is forbearance, or what everybody is calling mortgage forbearance. And there is a ton of misinformation in regards to this piece of your financial puzzle. So, you know, everybody's out there struggling in one way or another. Either it's a health issue, an employment issue, a financial issue. But the information out in the markets and on the news and everywhere in social media is, hey, call your mortgage company and they'll give you up to 12 months of no payments on your mortgage. And that's not what's going on. That is not the facts. It is fake news and a lot of the fake information from the mortgage companies, you know, kind of pleading to you guys to call in. And then unfortunately, you're at their mercy. So last Wednesday, I was on Steve Cortez's show, which you can hear Monday through Fridays on AM 560 from 5 to 7 p.m. And one of the main topics of our conversation, and one of the reasons why he called me, is the information that's being presented to many homeowners. So what happened? Let's kind of rewind back to the 2008, 9, and 10 crash for just 1 second. What happened with most homeowners that was facing financial struggles then is they called their mortgage companies, and at that time the buzzword was to do a mortgage modification. Okay, so a modification is a tweaking or an adjustment to your mortgage. So what they would do is they might forgive or not forgive your, how much money you're still owing them or behind. So let's say you're 3-4 months behind. They would take that money and they would add it to the end of the loan, and then many times, unfortunately, they put the consumer or the home owner into a much worse position in this way. They would extend the loan. They would raise their rate, believe it or not, and most people at that time didn't care about that. And they extended the loan out to a 40-year term, and then they added any deficiency balance that you had to the end, okay? And that is a big piece of also what crumbled the economy and the banking system. So now the big buzzword is forbearance. And just Wednesday, I was on the Steve Cortez show, like I said, and we discussed what a forbearance is and why my suggestion is don't do it. Find out all the facts before you sign on that bottom line. Because once you sign, you can't really go backwards. And you're going to find out why this program is devastating to people, not today, not tomorrow, but maybe 3 or 4 months down the road. So listen up, and then when we come back, I'm going to define in more detail what a forbearance of your mortgage is, and also all the options that you have to not go down that path. Here's that segment now.
Whew, great song. I kind of just want to let it keep playing and not get to this topic, but I have to because it's an important topic and an important guest. Folks, when it comes to interest rates, I believe I know interest rates just about as well as anybody. I traded them for 25 years on Wall Street, and I still watch them extremely closely. However, when it comes to mortgages, which of course are very much related to interest rate, when it comes to mortgages, I don't know anything. And I want to talk about mortgages because this is such an important issue for so many Americans right now who are facing tough times. And to talk mortgages, I had to go to the bullpen and bring in Dan Frio. Dan, thanks for being on the Steve Cortez show.
You bet. Thanks, Steve, for having me.
So listen, it's not good news for the country that interest rates are this low, right? I mean, we've got the 10-year Treasury yield well below 1%. That is not actually a good thing for the country. We want rates to be low, but not that low. However, it is good news for some folks, particularly people, for instance, who are trying to refinance. So what are you seeing out there in terms of consumers? Are a lot of your clients able to capitalize on these very low rates?
Oh yeah, it's crazy right now. I've been doing this for 32 years.
Mm-hmm.
We have more business coming in right now than I've ever seen in my whole life.
Mm-hmm.
And mortgage rates just hit we were locking rates on 30-year rates around 3 or under.
Mm-hmm.
And I've never seen that in my whole life. And like you said, it's good. We would have never seen this if it wasn't for the pandemic.
Right.
So it's good for homeowners. So if you missed it last time, it's your fault. I do a YouTube video every night, and I'm also on AM 1160, which is the sister station of this. I'm on there every night as well. And a lot of people missed the boat. About a month ago, rates hit their lowest in history.
Mm-hmm.
And then we just hit it again. Our company, we just hit it again this week.
Right.
So, I mean, the floodgates are wide open. So, there's a lot of fear out in the market right now. One of the things that I wanted to talk to you about is the forbearance thing.
Yeah, please. Because,
and I don't know if
I saw yesterday on CNBC, Diana Olick, who is the really excellent housing reporter for CNBC. One of my former colleagues, I used to work with her when I was a broadcaster for them. She reported that 2 million borrowers right now are in forbearance. So please describe what forbearance is, and then also give strategies for, what do you think people should be doing who can't pay their mortgage right now?
So, great question. And I hate to say it, I follow her as well. She missed the boat on this one. I hate to say that, and I know you're friends with her.
No, that's okay. Please tell us.
Yeah, the forbearance isn't what it's cracked up to be. For those that were homeowners, back in 2008, 9, 10, when all that hit, and you were doing it at that time too. You were in the pits, I think, at that time. I mean, it's the trading pits.
Right.
Pits,
right. So, not the metaphorical pits. Yeah.
Yeah. So a lot of people went into the loan modifications. I mean, those were a debacle, but they helped a lot of people stay in their homes. Here's what the forbearance does, and the way it's portrayed right now is that you get to skip, 2-3 months of payments. Well, you're not skipping them. It's like the government, especially in Illinois, how we just kick the can down the street, with taxes and pensions and everything else. What it's doing is it's saying, okay, you can skip, Mr. Homeowner, Mrs. Homeowner. You don't have to make right now April's payment, probably not May's payment, maybe not even June's payment. Okay, so let's say your payment's $1,500 a month.
Mm-hmm.
So what happens in July is you get a statement and saying, okay, you owe $1,500 for July, but you owe us $1,500 for April and June also. So we need $6,000 right now as your payment.
Right.
If you're not working right now, and many aren't, if you can't make the mortgage payment now, don't kick it down the street. It's unlikely
that you're going to have that kind of cash in just a few months.
Exactly.
Correct.
So what I'm promoting right now.
What's the alternative then?
Refinance. And here's why. And I know I'm biased because of the mortgage piece of what I do for a living. But one, the rates are historic lows.
Mm-hmm.
So almost guaranteed, if you qualify for a mortgage, you're going to get a lower rate. That's one. Two, when we refinance you, I structure you that you can skip 2 mortgage payments.
Okay.
You can truly skip them. So if we close your loan, let's say we start today and we close you in May, you won't have a mortgage payment in May. You won't have one in June. You'll have your first payment in July, and it'll be one payment.
Mm-hmm.
What I'm trying to tell a lot of people, too, is don't rack up your credit cards. You might not have a choice, but don't rack up your credit cards, for the next 2-3 months. Struggle, maybe get behind on your mortgage, and then try to do something because your credit scores are going to be terrible because your debt's out the roof. And if you miss a mortgage payment, you get behind, you just shot yourself in the foot. You can't refinance.
Well, and let me ask you that, Dan. So
right now
is refinancing, though, for somebody who just lost their job, is refinancing reasonable? I mean, can you get refinanced if you don't have a current job?
Well, so it's not like 2000 or 2008, 9, where companies were just shutting down.
Mm-hmm.
What's happening in most of the situations we're seeing right now is they're not truly losing their jobs. They're getting furloughed, or they're getting, a lot of the restaurant workers. They know, like we get a lot of letters from people in the restaurant business saying, soon as our doors are going to open up May 1st. At that time, the person still has a job. They're going to get a paycheck. So we can get you all prepped. So as soon as you get back to work and we can validate you're back to work, we can close you.
Okay.
But what I'm saying is try to make this month, because it might be 2-3 more weeks that you're off, but you might have dug yourself a huge hole. But if you lost your job and you're out of work, my prayers out to you. But if you're just furloughed and you know you're going back and everything, do something.
Right. Understood. Also, we've got to be aware that, and I say this a lot, I'm always trying to find the silver lining to this dark cloud, and it is a dark cloud out there economically. No way, two ways about it. But there are silver linings. One of them is if you're a homeowner, you got a big mortgage, you might save a lot of money on your mortgage by refinancing. So, or for people who are looking to buy a home for that matter, might be a great time. Yeah. Probably not for the sellers, but probably a great time for the buyers out there. So Dan Frio, so appreciate you being on the show, and I encourage the listeners to go to Dan's website, themortgageupdate.net.
So I think I answered most of the questions there, but let's dig in a little further. Basically, what I was saying is a forbearance isn't the opportunity to completely skip a mortgage payment. Basically, you're just kicking the can. So let me do the math real simple again. And I'm going to dwell on this. And if you follow me on YouTube, and I do a YouTube video every night, I am pounding this into people's heads, and I'm going to continue to do that for the next month or two because I'm trying to save you. So here's what a forbearance is. Basically, they're saying, okay, you can skip this month's payment. Not really skip it. You can postpone it. Let's put it that way. You can pause your payment. So let's say it is April. So we're going to pause that April payment, and your payment is $1,500. Let's make it simple. They're giving you a 3 months reprieve. So they're saying April, May, and June, you can pause those payments. Okay. So basically, those 3 months add up to $4,500. So you didn't have to make those at that time. Then the agreement's going to say, well, on July 1st, we're going to restart things for you because we gave you those 3 months reprieve. Now you need to make your $1,500 July payment, and you have to bring your account current. So you have to send in the $4,500 from 3 previous months for a total of $6,000 that you're going to have to send into your mortgage company on July 1st. Are you ready for that? If not, stay tuned. When we come back, I'm going to show you all your alternatives. Don't go away. Welcome back. This is Dan Frio. Hope you got another cup of coffee. So what we want to talk about right now is your alternatives to the forbearance agreement that everybody's associating it with the CARE Act and because of the pandemic and everything. So basically, the news out, and Diane Swank was on CNBC the other night. And I hate to say it, she's a really great economist, but she pooched this one. She basically made it sound like that you can actually skip those payments. Now, I'm not saying some lenders might not do that, but the majority of clients that I'm speaking with, and this is 9 out of 10 people, and many of these people have sent me their letters. The letter specifically says exactly how we went over it previously. It's saying, Mr. and Mrs. Homeowner, your payments in April are going to be 0. In May, it is 0. In June, once again, it is 0. This is going to be a huge help to you. However, in July, there's a little small print at the bottom right below all that. You need to make $6,000 to bring your account current. That is actually what forbearance means. It doesn't say skip. It doesn't say do not make your payments period ever. It's not forgiving you of those payments. It is forbearance, which is just kicking the can down the street. Okay, so please get that straight. And if you get a letter from your mortgage company, please reach out to me, and I'll give you all my information at the end of the show. You can find me on the AM 560 website. If you're listening on WYLL radio, which I am on also, I am on their website. You can go just Google The Mortgage Update with Dan Frio, and you're going to find ample information about me, and some of my top videos are actually talking about this topic now. Okay, so your alternatives. And yes, I'm a mortgage person. I truly have your best interests in mind. So if they're going to say, you know what, you can skip 3 payments, you can skip 6 payments, and you never have to make them up, God bless you, take it. But I can almost guarantee you that's not what's going to happen. Okay, so here's what I want to do. Rates this past week hit at the ultimate lowest level ever in history, period. Right now, I'm looking at my computer screen right now. We're closing a loan on Monday We lock that client in on a 3% 30-year term. The APR is 3.044. Okay, so basically there is almost no fees in that loan application for that client. So that is, where 30-year rates are. I can almost guarantee you your rate is higher than that. And 15 years low rates are even lower than that. So the options that I have for you are a couple. The biggest way to do it is refinance. Okay, and let's go through the various options of refinancing. If you currently have an FHA or VA loan, it is simple. As long as we can reduce your rate by 1/4 to 0.5%, and you have not missed a mortgage payment in the last 12 months, and your credit score is sufficient enough, we can do what's called a streamline, okay, on that product. So FHA and VA, here's what we need from you, and it's really simple. We don't need your income to validate your income, nor a job. We do not need an appraisal. Basically, we need the note to your mortgage to validate that we're at least giving you a rate of 0.5% lower, which in probably almost every case out there, we can do that with today's rates, and you qualify. That's it. So I don't need pay stubs. I don't need tax returns. I don't need an appraisal. So the first thing a lot of people say is, Dan, that's those stupid loans they used to do. No, it's not. Here's the thinking behind it. You haven't missed a payment for 12 months. You took out the loan 2-3 years ago, even a year ago, and you've made every payment on time. The program is designed that, what are we doing? Again, we're lowering your rate 0.5%. Obviously, at that point, your payment's going to go down. So if you can pay $2,000 a month, your new payment's going to be $1,600 a month, and you've never missed a payment before. Why should you miss a payment now? So how I structure these loans is this. We close you, let's say, for example, right now, I'm recording this in April of 2020. We close your loan on May 5th. Now, follow me with this. It gets a little complicated, but there's no fuzzy math that you see on a lot of programs, YouTube's, TV. As a lender, we can only collect your payments on the 1st of each month. Okay, that's etched in stone, basically. So if we close your loan on May 5th, we by law have to give you minimally 30 days before a payment can be due. Okay, so we go May 5th. Goes to June 5th is the 30th day out. Okay, we don't collect payments middle of the month, so we push out your payment to the following 1st. That would be July 1st. So we close your loan on May 5th. You do not make your May mortgage payment. Our payment is due in July, so that means you do not make a June mortgage payment. You truly skipped 2 mortgage payments. The one now due in July is just one normal payment, and it's the lower payment than where you were before, okay? That is how we refinance FHA and VA loans, okay? So now you don't have an FHA loan or a VA loan. It's most likely a conventional loan. Kind of works similar to that. The pay plan does, meaning your payments to us. We close May 5th. You do not have a payment until July 1st. The qualifications are different, though. I need your pay stubs. I need your tax. Basically, a lot of people say, I don't want to go through all this. It's a pain in the butt to get refinance my mortgage. It's really not these days. And again, the rates are phenomenal. If you called me and said, Dan, I'm struggling, but my rate is 1%, and I'm offering 10, I'd be like, do everything you can to keep your payments current, because it doesn't make any sense for you to refinance. I'm not trying to put you in a worse position, but I can almost assure you the rate that I can get you today is lower than your rate that you currently have. It most likely has to be because they're the lowest in history, unless your credit scores are bad and other reasons why you might not qualify. But so what I'm looking to do right now is let's look to see how we can help you in the refinance realm. Okay, one is most likely you're going to get a lower rate. With that lower rate comes a lower payment. Okay, so obviously you're going to have a lower payment. However, during these times right now, a lot of people are running up credit cards. You're living off your credit cards, especially if you're furloughed from your job. So it's tough. You know the employment checks are going to be coming, probably haven't come yet. So how are you putting food on the table? Well, you're probably using a charge card. That charge card probably has an interest rate of 20 to 25%. So you got to do what you have to do. But maybe what we look at is refinancing you, paying off a 25% credit card with a 3 or 4% mortgage, okay? And then even possibly pull out some cash for a rainy day. And that rainy day might be anytime soon. You might not be back to work on May 1st. You might not go back on June 1st. Wonder if this pandemic goes longer. I'm not saying I'm not the gloom and doom person. I think everything's going to be back as close to normal, middle of May. June, July, it'll be all resolved. The weather's back and everybody's kind of back at full swing. Let's get you through these short times. And again, my goal is not to put you in a worse position. It is to get you a lower rate, consolidate some bills, put some money in your pocket, truly skip 2 months mortgage payments, and put you into a much better situation. Okay, so that's the next alternative on how to do all of this. Okay, so we went through how to refinance, those options of refinancing. FHA and VA, those are government loans. We can do what's called a streamline. Very simple process to get you through there. If you have a conventional loan, it's also a pretty easy process right now. A lot of our loans are getting approved with only asking of the following information: your last 2 pay stubs, your last year W-2, and an appraisal. Many times right now, if you've been in your home for a long time and you've built up some equity, we might even be able to get an appraisal waiver where an appraisal isn't even need to be done. And if it freaks you out to have somebody come to your home in regards to doing the appraisal and walking through your home, we can even do what they call a drive-by at this time, and or what they call a desktop review of your home for to determine the value of your property. So the government and a lot of agencies are trying to make this as easy as we possibly can to help you so you don't get fooled by getting into this forbearance agreement. I can't do anything, and I wish I could, about COVID-19, the coronavirus, people being furloughed, losing their jobs. Where I can help you is giving you the facts and how do we truly skip 2 mortgage payments. Just think how much money you could put back in your pocket or not have to spend that you probably don't anyways if you didn't have to make a mortgage payment for 2 months. Okay. The problem that a lot of people are going to face, they're going to put their head in the sand, and they're going to maybe get behind on their mortgage, run up their credit cards, and then when they start to freak out 60 days down the road, they're going to come back and say, "Oh my goodness, now I need to apply." Well, if you go 30 days or more late, or go more than 30 days late on your mortgage, you're not going to qualify. And if you run up those credit cards, max each one of them out, you're going to totally annihilate your credit scores, and that's also going to hinder you from doing anything. So act now, and at least look into it. Let's see where we can put you. Let's see what we can do, and hopefully I can put you in a better space. So if you want to reach out to me, give me a call. I got an 800 number that's super easy to get me, 844-775-LOAN. That's 844-775-LOAN, or you can find me on the web at thefrioteam.com. Thanks for tuning in. God bless. Have a great day.
You've been listening to The Mortgage Update with Dan Frio. For over 30 years, Dan Frio has mastered the real estate market as one of the country's premier mortgage advisors. Call Dan today at 844-775-LOAN. That's 844-775-5626. Or online at thefrioteam.com.